I'm Bryce Butler from Access Ventures, and this is More Than Profit, a show where I talk with founders, investors, entrepreneurs, and leaders of all kinds about living and working with purpose, how they do it, and why. At Access Ventures, we've historically talked a ton about our work and investments related to access to capital. And to be fair, that's a ton of our work, and it gets the lion's share of our attention. But more broadly, our public equities, through our investment ethic, has a robust history in positive climate action and compelling data related to achieving sound financial performance while also reducing the negative impacts on the climate. Which is why today I was excited to sit down for this episode with Charles Wheeler, co-CEO and Chief Investment Officer at Greenbacker Capital. Greenbacker is celebrating its 10th year as a firm and really doing some interesting things, providing retail investors the opportunity to invest in renewable energy infrastructure. We all have been impacted in some way by the pandemic, and Charles recently said that for his work, the pandemic has changed everything. He said people aren't traveling, and those businesses have been decimated as a result. But the sun is still shining, the wind is still blowing, and even during a pandemic, the community needs electricity to power their new normal. He continued by saying, through the ensuing market turmoil, renewable energy infrastructure has demonstrated its resilience and brought into stark relief the potential it offers to investors for long-term, stable returns. He said, when financial markets are a roller coaster, suddenly boring sounds good, especially when it's accompanied by attractive and potentially tax-advantaged returns. And for them to achieve maximum boring, as he puts it, is a focus on risk mitigation at every step of the investment process, starting with the timing. But before we get into Greenbacker and its strategy and where they are and what they're focused on, a little about his truly idyllic beginnings on the coast of New South Wales in Australia.
I grew up in a small country town on the south coast of New South Wales in Australia. The population of the town I grew up in was about 1,000 people.
Wow.
And it was right on a beach, which was at least 2, 3, 4 miles long. So I grew up going surfing and just enjoying the natural beauty of the surroundings of where I lived. I suppose from that beginning, appreciated just the magnificence of nature and beauty of nature and unspoiled beauty of nature. So when I was about 16 or 15 or 16, I became quite interested in preservation of the forests in the area. They had some beautiful natural wild forest around, and at that stage, the forestry was gazetting certain areas for timber cutting, and so I got involved quite actively with a group that was trying to stop that from happening, so that they wouldn't damage any of the natural forests. And we were relatively successful. We managed to contain the forestry activities to areas where it was more regrowth rather than wild forest, and certainly not pursuing forestry activities in areas where there was potential for any sort of soil damage and erosion and so forth. That was also important. So that's a bit about my background. At the end of my high school time, which I spent down there, I left that small community to go to university. I was one of about 3 people from my high school year that went to do that.
Wow.
And so a lot of the graduating class pursued alternative careers in rural activities or in more manual trades and so forth. But I pursued a career. I pursued a desire to experience a wider set of opportunities, and so I went off to Sydney. Went to University of Sydney and graduated with a Bachelor of Economics from there in about 1981, I think. So a long time ago.
How'd you end up into economics? Like, was there some coursework in high school that led you down that path? Or?
They taught economics at university, at high school, I should say, and I always did very well on that subject. It always came completely naturally to me. My father was an accountant, country accountant, and so maybe I just had an affinity for that sort of information. But I didn't do, what I call traditional economics. I was a long-haired sort of hippie type, and I pursued political economics, which was more to do with the politics of economics and how to affect change. And so I actually studied Marxism and Galbraith and people like that when I was studying, more so than the traditional economic formulae, statistics, and so forth. I didn't do that. So it's more of a liberal arts type thing.
Sure. And so when you graduated from university, what did you do next? Like, obviously, you said that was in the early '80s, and Greenbacker, which we'll get to in a second, the current thing you've been proud to build and kind of grow is 10 years old. And so what transpired between graduating from university and kind of getting into the work at Greenbacker?
A lot. I always envisaged my time away from my hometown as being relatively a short period of my life. So I went to university. When I concluded my university degree, which I majored in economics, but I also focused on accounting and Australian business law. I thought I'd get a bit of experience in the big city as a worker before returning to my hometown and perhaps joining my father's accounting practice and looking after his clients in his retirement years. Fairly simple plans for a simple kid from the country.
Yeah.
And so I got a job with one of the big accounting firms at the time. I think they had Big Eight. It was called Touche Ross. I started there, and they put me in auditing, and I quickly realized that the skills that I was gaining as an auditor weren't going to really give me much value in my next step, which was to go back to the country and look after farmers' accounting and tax work and so forth. So I lobbied hard to move into the tax group within this firm so that I could learn something that might be useful in the next phase of my career. That was eye-opening because I really, really loved the work. I just really enjoyed it. And I had some pretty exciting clients that I can't really name, but I had, very, very big Australian corporations were my clients, and I was helping them, and I felt a real sense of value that I was delivering, and it was a very rewarding time for me. And anyway, so I pursued that for several years, and then I did what a lot of Australian kids do, which is resign from that job and set off to explore the world. And I went to Europe with my twin brother, and we did a big European trip all over the place, just experiencing different places and seeing different things. And when I went back, I rejoined Touche Ross for a while, but I think I'd got a little bit. My thoughts and vision had increased, and so when I what I thought would be good as another skill set to add to my talents when I returned to my hometown was to understand finance, because a lot of the rural community needs assistance with their banking and their financial arrangements. So I got a job at a bank. I applied one weekend for 3 jobs just to see what would happen, and I ended up taking a job at an organization called Macquarie Bank at the time. It was a small company, 500 people, a small operation, and the rest is a little bit of history, really. I was there for 25 years. It started at 500 people. By the time I left 25 years later, there were about 12,000 people. It lucked into a situation where the Australian government made the strategic decision that the private sector should become the major source of capital for infrastructure development across the country. And so rather than, small government was the thesis. Maggie Thatcher embraced that sort of thesis as well, small government. So the private sector should be the source of this capital and certainly the management of these government assets, because government really isn't very good at managing assets. And Macquarie, because Australia was such a thought leader in that process, we developed skills in Macquarie that we were then able to export around the world. And so that's what led to the growth. We were sort of moving with that evolution of the thinking to all the major economies of the world, with one exception being the United States, which today, and even yesterday when the president announced the huge injection of government money into the infrastructure space, it really wasn't focused very much on how can the private sector play in this space and what a difference can they make in this equation. Yeah. So that's the beginning of how I got into infrastructure. Hence, I got into Greenbacker essentially, because Greenbacker is an infrastructure play in renewable energy.
Yeah, so it's quite fascinating. I have to imagine you never actually did make it back to the country to be the country accountant, but some interesting lessons along the way. And it's fascinating that was kind of the driver in some of these decisions early on. Like, maybe move from auditing to tax accounting to banking and finance. But then I'm sure the excitement of it and the growth and the opportunity to learn and to continue to be challenged was pretty alluring and attractive.
Yeah, and financially rewarding.
For sure.
So, and sadly my father passed away, and, I was in the middle of something and I just couldn't return to take over the practice. So my mother sold the practice and that was the end. So the opportunity, the optionality went out of it, so to speak.
So with Greenbacker then, so this background in infrastructure, how did you find yourself going from the work in Sydney and all of that to Greenbacker, which is, correct me if I'm wrong, 10 years old, coming up here shortly?
10 years old this in February this year, so we've just passed the 10-year mark. So I came over to the United States in 2007. As I mentioned before, it was 500 people in Macquarie when I joined it, and it worked a bit like an escalator. We kept employing more and more people underneath, and the people that were at the bottom step gradually rose up to the top step. And so I was on one of those bottom steps when I joined, and suddenly I was managing large groups of people, and the centre of gravity of that organisation was in Sydney. So I stayed in Sydney managing people. And building businesses in that organisation. But as the organisation became much larger and there was a much bigger talent pool of people to take on senior management roles, the opportunity came up for me to sort of come overseas, to do an overseas stint, let's say. So I came to North America to head up one of the business units for Macquarie over here. It had a number of business activities, but one of which was renewable energy. The area that I was in was more focused on the tax attributes associated with these things because of my background in tax, right? So that was the angle that we were focused on. But it very quickly became apparent to me when I arrived here that Macquarie, that wanted to become a significant player in the United States as an organisation, could ride another escalator, and that was what was happening in the broader renewable sector. And if we built a business which was aligned to that sector in terms of the services that we could provide to those people, we could grow as those companies grew into the future. So instead of going and talking to General Motors and trying to become a banker to them, let's go and talk to some of the emerging players in this space, and in 5 or 10 years they'll be the General Motors of the future, and we can be banking them. Tesla, for example, organizations like that. So that was the big theory and the strategy, and I got very good support from the institution to build that concept. and that involved sort of three prongs, if you like. One was to build an advisory business. One was to build a principal business, which means putting Macquarie's own capital to work in that space. And the third was to build the funds business, which is to build an investment fund underneath Macquarie where you go and raise capital from institutions and you put that capital to work on their behalf, which was the model we'd sort of done in other infrastructure classes around the world. So in about 2008, of course, the world melted down, and so the brakes went on a little bit in terms of using the bank's own capital to put to work in these sorts of enterprises. But that was after we'd done quite a few transactions, so we'd already built up a bit of a presence in the market. But then I went and started working on the fund concept, and I'd have to say it was a very depressing experience from my point of view.
Why is that?
Because the funds who are managing your and my retirement money, my 401k and so forth, those institutions were just so out of touch with what's happening in the future. All they were thinking about is what's happening now and what happened yesterday, and they weren't thinking ahead of the opportunities. So when I went out to talk to them about putting capital to work in a renewable sector, which was the future in terms of the energy space, I got feedback like that renewables was too dependent on government support, and it was a fad. It was, it wasn't core. There was just every excuse known to humanity, basically, from every institution we approached in the United States was, no, we don't want to do that. And if you're going to do something in renewables, you should do it as a sleeve of your broader infrastructure fund, which might own airports or toll roads or other things of that nature. So that was pretty depressing feedback. We managed to get the Europeans, who are more familiar with what's going on in the sector, to commit to putting in $800 million to that fund, but they had to be a minority. And when we had not one penny from US institutions, we sort of had to call it off. So a lot of time, energy, and effort went into that exercise, and the result was that we didn't launch a renewable energy fund in the end. At the end of that process, I was a little bit disgruntled, I suppose, is the right way to put it. And so I thought, well, I'd been in Macquarie for 25 years. Maybe it was time to return to my hometown and just enjoy the surf and the sun and the sand. But serendipity as it is, I happened to meet a fellow who said to me he had a great vision, and his vision was go and raise capital from retail investors to put to work in renewable energy. And I had sat and thought about it, and I thought, well, people are actually making decisions to recycle trash, and they're making decisions to drive a Prius at that stage and put solar on their roofs and things of those types. They're making personal choices that are environmentally friendly because they want to try and have an impact. So maybe if they had an opportunity to put capital to work, their savings to work in this space, that would also be appealing. So there was sort of like the institutions are all caught in yesterday's paradigm, but individuals seem to be looking ahead and thinking, we've got to do something, we've got to make a difference, we've got to change the way things are done here. So off we went, somewhat naively, to do that. That was the formation of Greenbacker back in 2011. It took us an enormous amount of time, like 3 years, before we really could get out of the gate. And that sounds ridiculous, but it's we had to do this properly. We had to put together an offering to the retail market that was very robust and had been fully vetted and the regulators had gone over it from top to bottom, and it just took a long time because every time there was a 30 or a 60-day time for a government body to respond to you, they would respond on the 59th day, so that there was no urgency, no speed to get things done. Anyway, so ultimately we managed to come out of that process with an approval, and we started raising capital. But we were just really 6 people, pretty faces in the book, with no track record or no assets. So it was a pretty slow start, to be honest.
Well, and it's interesting because I'm just hearing you talk. I mean, obviously the markets have been a roller coaster, and even since 2008 with the collapse, back then with the housing market and such. It's interesting to me that renewables. You talk about like forward thinking and future oriented. As individuals, institutions always seem to be lagging behind, but it's always interesting to me that renewables are almost perceived as almost like a luxury investment. They're not a stable investment, or, those are things you do when everything else is maybe more secure. And so as the market or as the economy was waffling over the last decade, it's like people backed away from some of those kind of types of investments or the infrastructure. But what I'm hearing you say is really at the individual level, people were beginning in the same time to make decisions, recognizing the impact of their money in companies that have been negative towards the climate or towards social issues, and saying there's got to be something different. There's got to be a different way of doing this. So you were actually able to shift with Greenbacker to that individual consumer, if you will, or investor, and really capture some momentum. It sounds like it took a little bit of time, but talk to me about that. Like how was that different for you? I mean, what was that like to like the individual investors? Is it harder because it's more people involved? I mean, I have to believe going to institutions, it's larger checks from fewer people. The retail, I've got to believe it's more people, maybe smaller checks. What does that look like in kind of building that strategy over the last 10 years?
Yeah, I don't think we could see. There was no sign hanging out somewhere saying, "Please knock on my door." Let's put it that way. The reality was that it was more our perception. I mean, people were making decisions, personal decisions to recycle trash and put solar on their roof. There was sort of like good personal economic rationale for that, right? Well, maybe not for the recycling, but certainly for the solar. They were making it because they could save money. Why I think we were a little naive is that we didn't really anticipate a couple of things. One was just how difficult it is to reach individuals when you're selling a financial product. I can't go on television and advertise the product. There are all these regulations that stop financial products being distributed widely to the general population to protect their interests, which is appropriate. And so you've got a lot of barriers to getting to the individuals. But then when you do get to the individuals, they've never heard of investing in something like this before, right? So if you're talking to them about taking an interest in a piece of real estate, they sort of understand that because they've owned their own house, or whatever. They might have, their parents may have owned a house or whatever, or an investment property. They understand how the chemistry works. But we'd go and talk to them about owning a solar panel, a solar farm. They just had no concept of how that worked. And so it took a lot of education. But because we couldn't speak to the individuals, we had to sort of educate the doorkeeper. Then the doorkeeper was acting on behalf of their platform of people that could spread the word, which might be 100 people. So you go through research groups and then into distribution people, and then you educate them, and then you go and educate the internet. So it was a very long process to get a $5,000 or a $10,000 check. The difference, of course, was that people were interested and wanted to know about it, whereas the institutions at the time wouldn't even, they were just not interested. It wasn't any possibility.
Exactly. Well, with speaking to that, so you started to kind of explain it a little bit, but I think for our listeners, when you say sustainable infrastructure, what is it exactly that Greenbacker is investing in? What does that look like?
We invest in renewable energy infrastructure, which is sort of obvious things like solar farms, wind farms, It could be small hydro schemes. But we also have a mandate to invest in energy efficiency, and that might be like that a town might want to swap out its lighting to go to LED lighting and things of that nature, or insulation around some heating equipment to preserve energy. So all of those sort of categories of infrastructure investment are the things that we put capital to work in.
And so I was actually literally this morning on the way into work listening to NPR, and Secretary Buttigieg was being interviewed just about the latest infrastructure bill that you even mentioned from President Biden. So thinking about that, what are the implications when you're looking at that type of legislation and the opportunity that's before? How well is Greenbacker positioned, and what does that mean for the future of the United States, where both of us live, but also globally as we think about climate change and the responsibility of economies and businesses and people to kind of move in this direction? Like, where does that fit, the infrastructure kind of strategy and the opportunity that it seems like Greenbacker has built a great foundation and is really primed and ready to help support and grow with that over the next 4 to 10 years?
We're definitely primed to grow. I think the infrastructure announcements are more tailwinds, I would describe them as. I don't think there's anything very specific in there that is going to have a material impact, although there's been some discussion around further extending some of the existing tax incentives that exist federally. And there's also discussion around having a national renewable energy standard, so that all of the country will have targets instead of just various states. But one thing about the United States is it is 50 states, right? And so there's 50 separate regimes going on doing their own thing, some of which are very, very proactive, and some of them are not. But it's a very, like California, for example, it's a huge economy. And the fact that it has a 100% target for renewable energy, I think by 2050, is a major driver to activity that lives completely on its own, irrespective of what's going on in Washington. And the same as in New York and other important states in the U.S. economy. So I would just say generally there's an enormous amount of tailwinds going on, but I think fundamentally the reality is that because of the amount of investment that's gone into this asset class, both in terms of just nuts and bolts, but also in technology and so forth, improving efficiency, that now wind and solar is some of the lowest cost of energy on the market. It's cheaper to produce wind energy or electricity from wind and electricity from solar than virtually every other form of generation. So it's gone from being a concept where you may have to force people to do it to one where the economic rationale stacks up on its own. The obvious disadvantage is its intermittency. So I think what we're going to see in the next decade is a massive amount of investment in batteries or other storage technologies that can sort of address the intermittency of wind and solar to compensate for that.
It's so I'm going to flip gears a little bit, because it's my wife and I, we just moved on to 11 acres. So we live in Kentucky, Louisville, Kentucky, and we're actually putting in solar on our property. Yeah, but it's been a fascinating process, even just this residential solar project. Just to learn about what I've been floored by is just the power of utilities, and even just to squash some of those opportunities where you're like, don't we have kind of the similar goal here is my question. Because it's like, I have 11 acres. I could actually put more, I could help produce energy and sell back to the grid. Or I even brought up the idea, like I've got neighbors. I'm like, well, what if I put a mini grid on my farm, and then I go in with these neighbors and we sell shares, and they're like, well, it sounds good, but then you become this regulated utility, and it's just,
Yeah.
It's just silly. It's just dumb.
It is dumb, but I think you've got to remember that electricity it's almost a human right now.
It's true.
And the regulation is there to protect on the downside. And we did have an experience recently in Texas where the regulator got it wrong, right? And people suffered, people died because of that, right?
Yeah.
So the regulation is there for a reason. The utilities are monopolies in large part in their particular service territories, and they're very protective of their position there. But they've been in operation for since the 20s or even beyond in some cases. So they've got a lot of institutionalized inertia, one might say, including a lot of money invested in existing infrastructure that they don't want to just toss out. They want to keep it and use it until it's naturally ready to be retired. That the innovation that can come into the market is in some respects being slowed down by that inertia. They don't want to stop using that coal-fired power station just yet because it's got another 10-year economic life, and all they have to do is buy coal and burn it in a way they're generating energy, right? Whereas you compare that with some of these other schemes of renewable energy, they've got to make some important decisions and change the way things are done, and it's sort of easier just to stay the status quo. But I think there's sort of pros and cons, to be honest, for the utility.
Oh, for sure.
Yeah.
Well, it was interesting because we kind of rushed this year to do it because we found out that there's this net metering that's going in where if we do it before a specific date, we get the 1-to-1 net metering versus being paid the commercial rates that a coal power plant is paid to produce a kilowatt hour. So it's kind of interesting just to
get the retail rate. But there's a lot of development going on around the United States now, and regulation being adopted by state governments to facilitate community solar. And community solar is the concept you were sort of referencing, which is you have a large facility where you sell the electricity to individuals rather than to the utility. So an individual can own the production coming from that specific site, and it's sort of done virtually, obviously, because you can't tap in, you can't run a power lead out and tap into the solar farm 100 miles from your house. It's all done via the utility, but you're actually buying the electricity being generated at that solar farm directly for your domestic consumption. Maybe in an apartment building, because you don't actually have a roof, you can't put solar on your roof because you haven't got a roof.
No, I've seen that's some really, and it's interesting you bring up the storage technology, battery storages, because I think that's that next thing. To really figure out.
And all these things just become much more logical as the costs of production of the technology and scale of that technology improves. And that in some sense that was the vision with Greenbacker. I mean, there are lots of people out there buying assets, right? Like the ones we buy. We're not alone in doing that. We're one of the very few, if not the only one, that is tapping into the individual retail investor for that capital. And the theory is that the more people that have an economic alignment with the sector, that they have some of their own money invested in it and therefore have an economic interest in its future, the more people that vote, the more legislation can be favorable to that. And then ultimately, the cost of capital comes down such that projects that would not be viable can become viable, so that you suddenly, everything is becoming more and more competitive, and you've got to drive the cost down to stay competitive. If we can tap into this universe of capital that others can't, that's the real advantage that we think we can bring to the climate change problem. Because just capital on its own is a commodity, but if you can bring very low cost of capital, because you're finding investors that truly believe that the good is worth something as well as the cash flow, then you can drive the cost down.
Yeah, and I think that's an interesting thing. Like, I think the strategy of Greenbacker, although I'm sure very difficult to go to the individual investor, I have to believe personally that over time it's going to have an even greater effect on the issues of climate change, because you're actually involving more people in that process.
That's exactly
more
the theory.
people are individually involved versus passively through an institution. They're experiencing that. They're seeing the upsides on the financial returns. They're seeing the impact in their local communities and across the country and across the world. And so, so with that, like, what is 10 years old? What does the next 10 years look like? What are you really excited for, looking forward to the future?
What am I excited for? Wow. Well, the future is really just more of the same, but, to be able to really tap into just much larger pools of capital. I suppose it'd be really wonderful to be able to take this theory and apply it to other causes besides just renewable energy. Maybe it's other low-cost housing and other things where people can make an economic return and have a vested interest in the preservation and evolution of those activities. So that's the sort of theory. Yeah. If you turn something that is, I suppose it's in some sense it's the private sector showing what it can do in public causes. Like, it's not just renewables. We've been able to demonstrate that the public can get involved in that and have a nice economic return. And I'm sure there's lots of other ways the public can get involved in some of these things and get a good economic return. And then suddenly these things don't become someone else's problem. We own them. We individually we have ownership of the issues, and we can do something about it, right? And that's really what it's empowerment of people to make a difference.
So Charles, I got to ask, like, clearly you've had a fantastic career. Financially, I'm sure you're well taken care of. What is it that challenges you, and why do you do this? Because I think, a lot of people that I've met with the track record and the success that you've seen, they could go off and just retire, and they've done that, they've been there, and now they're just enjoying the fruits of their labor. What is it about this work, and why do you continue to press forward? What challenges you? What excites you? What do you wake up to do every day?
It is, and I don't want to sound arrogant here, because that's not the Australian thing, right? We don't.
But you're in New York now, so go ahead.
But it is a bit of a dream to be able to look back on one's life and say, I made a difference. Right? I was obviously the father of my 3 children, so that made a bit of a difference to the population of the globe. But what else have I done? That's the one thing to drive around in a fast car and live in a big house, but that doesn't really make a difference to anyone other than yourself. I want to be able to sort of, when I've been carried off in a wooden box, to look back and say, look, I was able to change something and have a material impact on the lives of others. Not just to make myself feel good, but because that empowered them to make themselves feel good. Like giving people some sense of a future where they might feel like they don't have much future at the moment. But that sort of drives me forward. I mean, I'm living here in New York by myself. My wife is in Sydney, Australia. So I'm making a lot of personal sacrifices to continue to realize my vision here. But the other thing, to be honest, I really enjoy the sense of that you are working with people, right? I work with the people in my organization. We've created 100 jobs in the United States since we started Greenbacker. And so, that's families and life. You think about how many of those people have parents, and all of those people we're impacting. It's just great to see the young people evolving and getting involved and participating in what we're doing and giving people careers and shaping the future, I suppose. To
learn more, check out greenbackercapital.com. Thanks for listening to More Than Profit, and if you liked what you've heard, do us a favor by subscribing and leave us a review wherever you get your podcasts. I'm Bryce Butler with Access Ventures. Check out our work at accessventures.org. Thanks for listening.